Hello, everybody, and welcome to our market update. It is the 8th of March, 2026. Glad to have you on board. It's a Sunday, finally sunny, daylight savings time in effect. Lost the hour of sleep, but we'll trade that off for the extra sunlight at the end of the day. Hope all of you are keeping well. As we get ready for the trading week next week, of course, the news all week last week was oil. I'm going to talk a lot about that in just a moment, but I want to keep the tradition of where we start with the tech sector, although I'm thinking about breaking that tradition as the tech sector doesn't seem to be the leader anymore. And I'll talk about that as well. But let's start here anyway at the Qs. And I've been saying this now for the better part of 2 weeks or so. This area that we're currently in the middle of the ribbon, doesn't really give me a lot of confidence one way or the other. And I've been saying I'm biased towards, or my thoughts are that this is going to hit the lower end of the ribbon first at 585, then we will hit the 635 level here. And as the days go by, that thesis seems to be playing out. There's those lower highs, lower lows. So next week, especially with the price of oil doing what it's doing, geopolitical tension doing what it's doing, I'm a little less optimistic on this hitting all-time highs before it hits the support level at 585 or so. And again, I do find it interesting that we are doing all of this in the neighborhood of the 150-day simple moving average. Of course, that is the old Weinstein indicator. So for me, current action plan on the NASDAQ is really just watchful waiting. And you're going to hear that a lot on the equities indices from me today. I'm not really convinced one way or the other, more convinced that we're going to touch this level first, as I've been saying for the last couple of weeks, than this level here. As we go over to the SPY, I think it looks a little bit more interesting, but again, we're finding support. This is the second time that we found support at that 150 day. So let's see how this plays out. We now have an official trend change on the chandelier exit as of Friday. So the chandelier exit really tracks the 3 ATR with some adjustments along the way. So if you were just to put a 3 ATR or use that as a trailing stop, this line will be a little different than what you would have on your screen with that. So, but I find that this is all programmed in such a way that it is enough for me to use this as a comfortable 3 ATR stop or 3 ATR support level or resistance level. So in this case, again, I'm of the opinion that I think we hit this 650 level first, 655, before we reach all-time highs again. So let's see how that plays out. Same thing here as I said on the NASDAQ, just watchful waiting. We go over to the Dow, which has been the star of the show over the last little bit. And of course, lots of people were talking about this $50,000 level, 505 on the DIA. It's the same thing. 50,000 on the Dow. And it's been a nice, slow, steady decline since then. If I were to just draw the decline, as of last week, we were at about 4.5%. We're now currently at about 6%. And looky here, we are right at that 150-day trend change as well. This one happened on Thursday and followed through on Friday. So I'm bearish on this as well. And we're actually quite close to my EMA ribbon, which brings excuse me, the close down to 467 or so. So this one looks like it's going to be the most likely to touch my bearish bias area more. It's going to touch this area more quickly than the SPY or the NASDAQ will. So keeping an eye on this one as well. Small caps, and again, no surprise. You can see we're definitely finding support at that 150-day, which I do like. I've got that on my chart now, just as not something with which I'm making independent trading decisions, but I am including this in my research because I think it's becoming more relevant in this regime as we're retracing now from all-time highs, and I want to see if we can find support here at that 150-day. So this thing, same opinion as the other major indices that we just looked at. I'm looking for a bit of support here at 248, then again at 242. So I'll keep an eye on that. No new trades for me in any of these preceding four items that we just mentioned. Now, start with or go to oil, where on the Thursday chat session, I said that the idea of $100 oil a week ago seemed absurd, but we're actually quite close to it. We hit a high of 92.61, so we're $7.39 away from that $100 level. I think we may actually reach it this week. If the news out of Iran continues to be pessimistic, I think that $100 level is not out of question for this week. If I put on, and I did this on in a separate tab here, if we look at what happens with the price of oil as we compare it to inflation, one of the things I think it's not a surprise that as the price of energy goes up, inflation goes up as well. So on the on this chart, the blue area here is the price of crude, and the white line is CPI. And you can see when the price of crude spikes, CPI follows. And when it declined, you can see that decline there as well. And this is going back now, I've got it back to 1997 there. So how do you play this? And I've been looking at this since the beginning of the year that I want to be in, and I'm putting my money where my mouth is by being in commodities. I do like gold. I do like silver. I've liked both of those, but the group also brought this up last week, and I'm in Nutrien as well, the potash play. So I'm starting to feel like there is a bit of shift happening from the tech sector, which was my favorite, but in this business, this is more of a what have you done for me lately business. So the tech sector seems to be fizzling out. I still am somewhat bullish on it, but I do want to move over and I want to maybe concentrate a little bit more. Um, Concentrated right now in gold and silver through SLV, XGD, and PSLV. So those are my three big metal holdings. But if I look and I see what's happening with the commodity space, I do want to participate in that. So this is crude oil futures. Now, this was a great point that was brought up by the group on Friday when I was looking at my trade on NAT. Would I want to buy up here? And the answer was no, I wouldn't want to buy up here. So I wanted to protect my gains on that $6 call that I had, and I sold shares against it to go net delta neutral. And now both of those positions are in profit, which is a wonderful position to be in. On crude, this is so news driven, not surprisingly. This is so news driven that is this a good time to start a new position? For me personally, no, because this stop down to 80 is a little bit more than I can tolerate from my risk tolerance perspective. Could this go to 100? It absolutely could. Could it come back down to 80 if we get some kind of positive or optimistic news out of Iran? Yes, it absolutely could. So in this for oil, I'm currently just watching and waiting for a proper setup. But if I look over at some of the other commodities, and this was pointed out, I believe, by Sandy on Friday, that a lot of these commodities, this one looks more interesting. Now, if I compare this just to the ATR, this is also quite far, but it's on my watch list, as is wheat. Same kind of look as CORN. So these are, of course, agricultural commodities. This one I was in a bit early on. So I think I was in around here, and this was for a $90 strike for January of 2027. So I'm sitting pretty right now on NTR. Not really a whole lot for me to do in terms of adjustments. My stop loss is here or I'm placing my stop loss here at, I call it 70, just to make things simple. There's our reentry with our AI tool that we recently deployed on Victory, on Velocity 2. And this one seems to be working. There's the entry here, and you can see this entry kind of fizzles out a bit. This re-entry tends to work really, really well. So this is another one. Another area that I'm looking at here is the bonds, and I'm specifically looking at inflation-adjusted bonds. As the price of oil goes up, inflation goes up, I want to be participating in the inflation-adjusted bonds. So this TIP tracks those bonds. And there are variants of TIP, and I'm going to show you those in a minute. This one to me actually looks the best out of all of the entries that we've seen because this one is near a stop loss level that I can tolerate, and I do like the macro trend here on TIP. The only problem with this, it's not a fast mover, or it's not a big mover, so we'll have to consider this one a little bit more carefully. There's STIP, pardon me, which is the shorter term expiries, and you can see the gap there on Friday, and you can see the move starting last week. Let me put this away because I can't see the. Oh, there we go. Okay. You can see the move starting this is last Thursday. And of course, when we open the markets on the 2nd of March, we come back down a little bit. Maybe this is on easing of tensions and then spike again there. And there's, what's the other one that I'll get the name to you. So it's STIP and there's a longer, is it LTIP? No, I'll get the other one to you. It looks very, very similar. So it's just a different duration of bonds that they're tracking. But I do like TIP. I will be looking at this more carefully over the next week. The other one I want to look at a little bit more carefully is this one here. This is the Simplify Hard Commodity ETF. And this is everything they own. Now, you can see the percentages are very, very small because they are mostly concentrated right now in just a money market fund here, but they're using leverage to trade corn futures, wheat futures, crude futures, cotton. They've got coffee, feeder cattle, gold, copper. I believe they have silver as well. There's oil, more coffee, live cattle, lean hogs, natural gas. So I do like this one here instead of trying to find one commodity. If we're going to go the route of supply shocks and things of that sort, I actually do like this one here. Again, bit of a slow mover, but nice chart to get in on, and I don't particularly mind this area as a stop loss here. So I'm looking at HARD for the commodity aspect of things. And speaking of the commodity aspect of things, gold futures, I still, as we're going into this higher oil, higher inflationary high inflation period, I do like when I get the right chance to add to XGD when it gets above this ATR, I'm going to do that, or I'm going to consider doing that as long as everything else in the economy looks okay. And when I say okay, I mean points to gold going up. One of my better decisions on XGD was selling calls against it. And this back and forth or this up and down movement has really helped me with those calls because, yes, as the price goes up, those calls lose value. But in this period, that theta decay is really working in my favor. And just sitting there holding XGD and short the calls, which I believe are at 70 and 75 across two different strategies. They're constant. Their decay is making me money on a daily basis. So that was one of the smarter decisions I made. And of course, I had wrapped this with some put options as well because in the event that gold really sells off, unlikely, but at the same time, stranger things have happened. Uh, I do have that protection on now. I think the protection on XGD, I want to say might be at 40 and 50, but my cost base on the actual shares, I think early on was at 25, then another set was added, maybe around 40 or so. So it's basically a collar with a bit more of a bias to the upside. So yes, while I do like gold to the upside, I do want to protect myself to the downside here. So that's sort of an insight into my trading style. I do have opinions on where we're going with the market, macro opinions as well as short term, but at the same time, I don't pretend to think that I'm smarter than the market, and I want to have some kind of downside protection in case the market proves me wrong. And it's done that many, many times. And because of that protection that I've had, the the impact of that has been much more muted, and I enjoy trading in a much more controlled manner. Yes, the gains are going to be limited, but I'm banking on the fact that I can exploit my edge over and over again instead of looking for that one big home run, which may or may not come. So just a note on my personal trading style. Your personal trading style could be completely different. And if it's working for you, continue doing it. So XGD and gold, nothing wrong with silver. Again, you know about the collar that I have on silver on SLV, which has been great again. The the long call, which is way out of the money. So on SLV, long call is at 100. So we're nowhere close to that. And every day it seems it's decaying a little bit more. My put is at 75. So it is holding its value pretty well. And as long as the volatility in silver continues, which I expect it to, uh, I'm okay holding that collar the way it is. It's currently profitable by a small amount, but it's currently profitable. And I know what my exact risk is on that collar. So no changes to SLV right now. Bitcoin. We know we had that big move here on BTC USD, got up to as high as 74, almost 75,000, which is pretty significant. We did have that turn on the ATR trend filter, and now we've come right back down to where we ended the week, where we were just about when I did the market update last week, 65. We're currently at 66 and change. In this case on Bitcoin, I think we're just in a holding pattern here. I haven't seen anything. I thought this could be the start of something bigger to the upside. It turns out that it faded completely, and that's why I'm not looking to find a trade where where I'm trying to predict without any kind of background on what could happen. I'm waiting for the market to show me its hand and then make a much more informed prediction. So in this case, if I was looking for anything, I'd be looking for shorts right now. If you have a longer term perspective on Bitcoin, as a lot of people do, and that's great, and you're buying this because you think over time uh, the dollar debasement trade is going to play out, this could be a great buying opportunity. For me, I don't have that strong opinion on Bitcoin from a long-term perspective. I'm looking for a trade on Bitcoin, and there's nothing here for me to look at right now. If we go through the Mag 10, you can see most of them look, Meta's been very choppy. I don't know why the Sprott Copper showed up in there. I got to change that. You know what? Let's get rid of that right now. Okay. Amazon continues to struggle here. Apple, you can see, I think on Vince's system, this flashed a short. I'm not that keen on that short here, considering we're at that 150-day simple moving average. In fact, I may consider this for a long next week. Tesla did break below that level, but it's still close enough that I'm not looking for shorts right now. Nvidia earnings disappointment continues to stay in that channel. There's the upper end at 190, call it 193, and our lower end comes in around here at 176. So I need to see a clean break, and more importantly than that, a little bit of follow through for me to be convinced one way or the other. AMD, similar kind of look to Tesla. You can see we had that recent reentry there. That was that 80%. And you can see, so this 80% is based on how this kind of trade has done in the past in terms of going up 3% from the entry. On AMD, that 3% is, you could do that in an hour or so. So when you're looking at these, just be mindful of that this is a simple target that's been deployed across all charts. And for those of you that have access to this, the new version of it will allow you to change that the ATR, excuse me, the AI parameters. Netflix, nice move up after the Warner Brothers fiasco ended. Again, not a whole lot to do. We may get a long signal here shortly. And I like Netflix from just a long-term perspective. I use the product. Anyone who I talk to about television and entertainment, Netflix seems to be a no-brainer. Growth on Netflix, a little unsure about. It seems like everyone already has it. I don't know who they're going to sell it to, or they're going to start deploying ads, or what else are they looking at to increase revenue? Google, I continue to like. The stock, I don't like as much right now. Microsoft, I think, is probably the worst of the Mag 10 here. And Palantir, of course, as Johnny B has been trading this for uh, the tensions in Iran, has been a nice trade. Maybe not a nice long-term trade, but a nice trade since the beginning of the month because of the Iran situation. Coming up this week, we have said CPI year over year coming up on Wednesday. So that could add a little bit of volatility into our Wednesday trading, or getting up to Wednesday trading. We've got the jobless claims on Thursday, GDP first revision on Friday, personal income, PCE. So there are data points this week that I'm going to be keeping my eye on. But more importantly than that, the headline for me is watch and what happens with oil, and watch what happens with commodities. That's it for us for today. We are back tomorrow at 1 p.m. Eastern. We hope you can join us then for our next market chat. In the meantime, we always wish you profitable trading, the very best of health. We'll see you then.